Today, oil is losing its bullish momentum ahead of the weekend and the OPEC Plus ministerial meeting. The ruble may get support from a weaker US dollar. However, investors' attention is now focused on oil, which is a bearish factor for the ruble. Currently, the ruble lacks internal drives, while the background also remains neutral. On Friday, the energy market has entered the phase of correction. The current price levels provide great opportunity for taking profit on long positions. Besides, traders have already priced in all the factors in the quotes, including the upcoming OPEC Plus meeting on output cuts. The market is quiet ahead of the weekend and amid the lack of new drivers. Next week, the alliance will revise the deal on production cuts for the beginning of the next year. As expected, the OPEC members will delay the planned increase in oil output until the end of the first quarter. It's also possible that the current terms of the deal will be extended for the first 6 months of 2021. This will be a better scenario for the market and may push the oil quotes up to new highs. Today, global oil benchmarks are trading mixed. Brent futures contract with the nearest expiration was moving sideways as the bulls did not want to give up the level of $48 per barrel. WTI crude edged lower by 1.5% to settle just above $45 per barrel. At present, there are no strong drivers to send the prices higher, so traders have again switched their attention to concerns about oversupply. What's more, some analysts expressed doubts about the reliability of the new vaccine. On Thursday, Brent closed the session below $48 per barrel as the bearish candlestick has completely offset the previous gains. The downtrend is likely to continue. The market activity is low today. However, if global sentiment worsens, oil prices may return to the range between $46 and $46.5 per barrel. Given that the recent oil rally was mostly fueled by emotions and anticipations, a new round of correction is sure to start soon. Yesterday, the ruble depreciated slightly against its major rivals. Today, a moderately negative background is set by the overbought oil market. The consolidation in emerging market currencies also limits the ruble's growth. Besides, investors are concerned about global economic recovery amid the ongoing coronavirus pandemic. The Russian currency may get some support from local sales of earnings received by export companies. The Friday factor will most likely prevail today. This means that later in the day the demand for foreign currency will increase. Thus, the US dollar may attempt to reach the level of 76 against the ruble. However, a drop in the US currency will benefit both the oil and the ruble. Although the markets are holding at their highest levels, the ruble still hesitates to test the mark of 75. Perhaps traders are waiting for clear signals of a new stage in global markets dynamics. This will allow the ruble to leave the levels reached during the corona crisis and head for the upside. That's all for now. Thanks for watching, and we'll see you back soon.